Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri Marketing. Well, grains were leaning mostly higher on Friday in a quiet session. Live cattle to the plus side, but feeders and hogs lower. And let's talk a little bit about grains. First of all, a very quiet day on Friday. We had the big explosive move on Monday, and then it was kind of a downhill slide the rest of the week, wasn't it?
Really was. Volume on Friday was, a lot like we see the week of Christmas or New Year's. I know we've got a long weekend coming here, no markets Monday, but yeah, it was really a very quiet day on Friday. I think the market's looking ahead and, need a little more information as far as how that second crop corn is going to continue to go in the ground in Brazil. And obviously their bean harvest, advances, their basis continues to weaken up almost on a daily basis. So, you got to throw that into the pot too. But all things considered, it was a very quiet week.
Quiet week. We were down slightly. We hit some new highs for the move on Monday in soybeans, the new contract highs in soybean meal. But do you think the Argentina story is over? We saw some lower crop ratings on Thursday going into Friday in Argentina. So is that baked in?
Well, I think we're getting about to the end of it. I mean, I think the market
Okay.
obviously has built in a lot of losses. We won't know till that harvest is complete exactly what that crop size is. They continue to get some decent rains, though, in some areas, almost, consistently more than forecasted. So some areas are receiving some okay rains that are helping, that crop progress or at least stabilize. Other areas have missed out. So I think there may be a little more play as far as the weather goes here for a couple more weeks, but you're almost getting far enough into the game that I think most of the drought problem has been priced into the market in here. And to me, you mentioned it earlier, I think it's all about meal. If meal can sustain a push, a sustained push north of $500, then maybe there's some more fun buying. But it's looking a little bit tired. We're overdone. We've only been here, I think, 4 times in history. And so I think as meal goes, so will the bean market.
Yeah, and we put in a reversal there, it looked like on Monday again. So we'll see if that sticks or not. The other story, though, that may play out farther down the road here is going to be Brazil, isn't it?
Yeah, for sure. They've been a little bit slow getting that crop out. They've had some rains to kind of slow that harvest progress. It also matters because they're coming right in after the combine, with their corn planters for the second crop corn in those areas that they do the second crop at. So, weather still matters there as well. It might be more of a weather issue for Brazil than it is for Argentina. But point being, weather still matters very much, with getting that crop of beans out and the second crop corn in and planted.
So do you think it's going to take a crop problem like that in South America to get us back above those resistance areas that we hit on both corn and beans this week?
Yeah, I do. I think corn especially. We've been up there 5, 6 times and just couldn't be able, haven't been able to push above 690 in that front month. So I think it will take some sort of either really slow planting progress to get a threat to potential yields, or B, something later in their season where they get a stretch of 2 weeks, 3 weeks of hot, dry weather to get a sustained push north of 690.
Wheat market down for the week as well here, even though we were a little bit higher on Friday. But, do you think we're going to build some more premium on next week as we start those talks about extending the Black Sea export corridor deal?
Yeah, the funds have built a pretty large short position up. We're just shooting in the dark right now because we haven't had the CFTC commitment of traders report here for a few weeks due to some delays and some glitches there. So funds have a big short position. I think they have started to come out of some of that because of what you said and the uncertainty with the export corridor continuing. It seems like Russia's kind of dragging their feet a little bit, so
Right.
maybe there will be a hiccup in continuing that export corridor. If there is, the funds still have a big short position, and they got a lot more contracts to come out of if they get spooked in that position.
As I mentioned, live cattle futures higher on Friday, scoring some new contract highs. We were up for the week. We did see some higher cash, even some 162 in the south on Friday, which I believe is $2 better. Can this market keep going?
I think it can. The cutout continues to scream higher as well.
That too.
I think it can, and it's just the culmination of a lot of different things over the last couple of years with 2 years of drought, cutting back on breeding stock, and in heifers and cows. And now the numbers, excuse me, have shrank down enough that it's starting to affect things. And so it's squeezing the packer margins a little bit. They're still making some money, but this higher cutout that we've seen for a couple weeks should help them continue to, be aggressive and bidding up for cattle. So I think it looks fairly good. The one caveat is, mentioned it earlier, we haven't seen a commitment of traders report for a few weeks. Funds have a massive long position built up. So, next couple of weeks as we get in closer to the end of the month, maybe suspect for a little bit of profit taking from the funds. But other than that, I think fundamentals look good for higher.
Yeah, I think they're supposed to come out with the commitment of traders on the 24th. We'll see if that happens. Hog market again, the funds were short there. We thought maybe they were starting to cover, but we've been down the last 3 days. Is that just because you've got the futures at too much of a premium to the index, or what's the problem?
Yeah, I think that's part of it. That's been the problem with the February. February's looked good for a while. Funds had a long position, and we just got too far ahead of the cash market. It does seem like we're starting to stabilize the cash a little bit. The cutouts had a nice little bounce, and so maybe we can continue to rally. But I do think that the upside is going to be somewhat limited in the April because of the big premium we've got built up. I mean, even if the cash and cutout continue to rally, there's a lot of premium there, probably more so than historically what we typically see this time of year.
And even though it was quiet today, I will take that as a victory considering what some of the outside markets were doing, like crude oil being down as hard as it was and the dollar up.
Yeah, it was really considering some of the outside markets, like you mentioned, grains and livestock both kind of just limped into the weekend. We didn't see big sell-offs, so maybe that's a silver lining. We'll see how we start the week out, after the long holiday weekend on Tuesday.
Thanks so much for joining us. That's Chip Nellinger, Blue Reef Agri Marketing with Markets Now.